Welcome to Explain the Charts, where we break down the news and charts to help you understand the market. Today, we're looking at the GBPUSD, a highly volatile pair that's been making headlines recently. Let's start with the news. The Google search results for GBPUSD show that the market is buzzing with anticipation ahead of the Federal Reserve's rate decision this week. Markets are pricing in a 50 basis point rate cut, which could weaken the US dollar and boost the GBPUSD. The Bank of England is also in focus, but the BO is expected to keep rates unchanged, which could limit any further gains in the pound. Other news includes a recent rise in sterling after positive UK labor data and a brief pullback from the 29-month high against the USD. Now, let's dive into the charts. We're going to start with the daily chart, which shows the overall trend of the GBPUSD. We can see that the GBPUSD has been in a strong uptrend since the start of September. The pair has broken through multiple resistance levels, including the 1.3000 threshold, which is a significant psychological barrier. However, we can also see that the recent gains have slowed down, and the GBPUSD is currently trading near the 1.3200 level, which is acting as a strong resistance. If we look at the 1-hour chart, we can see that the GBPUSD is consolidating near this resistance. The pair has been trading in a tight range for the past few hours, suggesting that there is some indecision in the market. It's important to note that the 1-hour chart also shows that the GBPUSD is still trading above its 50-day moving average, which is a bullish signal. Looking at the 15-minute chart, we can see even more short-term fluctuations and potential trading opportunities. The pair is currently trading near a support level around 1.3170, but if the GBPUSD breaks below this level, it could trigger a sell-off. However, if the GBPUSD breaks above the 1.3200 resistance, it could signal a continuation of the uptrend. Now, let's zoom in on the 1-hour chart and look at the last 24 hours of trading. We can see that the GBPUSD has been trading within a range, but there was a significant spike upwards around 10 o'clock Universal Time Coordinated, which coincides with the release of positive UK economic data. This rally was short-lived, as the GBPUSD quickly retraced back to its previous range, suggesting that the market may be hesitant to break above the 1.3200 level. Looking at the daily chart again, we can see that the GBPUSD has been consolidating near the 1.3200 resistance for several days. This suggests that the market is unsure about the direction of the GBPUSD. The upcoming Federal Reserve's rate decision could be the catalyst that breaks the GBPUSD out of this consolidation phase. If the Fed cuts rates by 50 basis points, it could trigger a significant rally in the GBPUSD, pushing the pair above the 1.3200 resistance. However, if the Fed's announcement is not as dovish as expected, or if the BO surprises the market with a rate cut, the GBPUSD could reverse its recent gains. To summarize, the GBPUSD is currently in a consolidation phase near the 1.3200 resistance level. The upcoming Federal Reserve's rate decision could be a game-changer for the pair. A dovish Fed could trigger a rally, while a hawkish Fed could trigger a sell-off. The 1.3200 resistance and the 1.3170 support are key price levels to watch. The short-term fluctuations on the 15-minute chart provide trading opportunities, but traders should be aware of the risks associated with volatile market conditions. Overall, the GBPUSD is a volatile pair with a lot of potential, but traders should stay informed and be prepared for sudden shifts in market sentiment.